Happy Saturday, everybody. I hope you guys are having a great weekend. Jamie Dimon just said something and my jaw dropped. Like I was literally like, did he just say that? We're going to talk about a recession scenario that he mentioned as a possibility and what that might mean for the housing market. Now, if you are a home buyer or home seller, I actually created a map that will tell you whether or not your neighborhood is a buyer's or seller's market. And believe me, you can literally go across the street and one would be a buyer's market and the other would be a seller's market. So I've got the best data that anybody has anywhere. I'm going to show it to you. Now, if you don't know me, my name's Ethan Flynn. I am a CPA and licensed real estate agent in the Nashville area. I'm not trying to get anybody to buy, but if you are a cash heavy buyer and you are looking in the Williamson County area, feel free to reach out. Let's see if it's a good fit for you, good fit for us. If you're not cash heavy, I'm not trying to exclude you, but just this market dynamics right now, it's really not a good time for most people to buy. And certainly if you're not cash heavy, I would just highly recommend renting. With that being said, without further ado, let's get into the data. Jamie Dimon, this is Jamie Dimon at the World Economic Forum. This is an old picture. Business Journal. I don't know why I couldn't find it. I'm shocked Bloomberg didn't pick this up, but listen to what he said about three scenarios now he's talking about commercial real estate, guys. Commercial real estate is a disaster everywhere. Even in Nashville, commercial real estate is crashing. Guys, listen to me. Commercial real estate is crashing. It's very different than single family right now. But let's listen to what he said. He said, if we have a soft landing, which is possible, and rates don't go higher, which is possible, it could be a small problem. So commercial real estate, not a big deal. Banks are fine. Okay. If we have a hard landing and rates don't go higher, it would be a bigger problem. And listen to this third scenario. This is mind-blowing, guys. This is what really caught my attention. If we have a hard landing with higher rates, which I think is possible, it will be a bigger problem. With higher rates. What? How in the world could we have a recession with higher rates? Well, let's take a look at a couple things here. First, I want to show you the federal budget. Okay, the federal budget net interest expense hit $659 billion, which was a new record for 2023. We are easily on track for $1 trillion in net interest expense over the next couple of years. As debt gets refinanced at higher rates, it could easily hit $1 trillion. It's a $200 billion a year increase. Guys, this is a massive increase to our budget. I think the budget's like what, $4 trillion, $5 trillion. So we're talking about like 5-10% hits to the budget without increasing any service. This is just interest expense. At the same time, look at this. This is the Federal Reserve profits. Now, if you think, I don't care about the Federal Reserve, why do I care about their profits? They give their profits to the Treasury. It subsidizes the federal government budget. But when there is no profit, which just happened for the first time, and this goes back 20 years. I don't know if they didn't have a profit before then, but it's the first time in 20 years, 25 years. Negative $117 billion. Guess what? The Treasury doesn't get. They don't get $50 to $100 billion a year from the Federal Reserve. This, again, is a headwind against the budget that without raising taxes and without increasing services, without increasing anything, we're already starting at almost a $400 billion hole to what we were before. That's a 10% hit to a budget. Ask a business what happens if they get a 10% hit to their budget without anything else changing. It is painful, guys. So 10% hit on the revenue side right out of the gate. I should say revenue. It's a combination of revenue from the Treasury and expense from the net interest expense. Guys, it's not good. So what are the options? The options are going to be taper QT as part of the options. I got to renew my Bloomberg subscription. I canceled it because I'm cheap and clearly I need to buy it, but $199 a month, I'd do that. QT taper, guys. The Federal Reserve could taper down QT. They could start expanding their balance sheet and printing money again. That's inflationary. Okay, the government spending huge deficits is inflationary. These inflationary things could be very problematic for the housing market. It could increase interest rates, in which case home prices drop. It could be so inflationary that home prices keep going up. Guys, the market right now is extremely uncertain. And we have people in the federal government and in the Federal Reserve that I don't think truly understand the consequences of their decisions, but they are making decisions that will absolutely impact you in ways that are completely unpredictable. Let me just say this. I know a lot of you think there's going to be a housing crash. I thought there was going to be a housing crash. I'm much less certain now. But let me just say this. Even as unaffordable as it is, if the federal government just handed out a bunch of money to everybody, do you think the housing market would crash? I think the answer is no. Now you say, well, they would never do that. They did it 2 years ago. They already did it. You say, yeah, but inflation is under control. I'm just saying it's not unrealistic to think that if we hit another recession, that there would be an inflationary response that could make interest rates go up. Guys, all I'm saying is you don't know whether or not there's going to be a crash. I don't know whether or not there's going to be a crash. There's many recessions where home prices don't drop, don't go negative, or barely go negative. So the fact that they've already dropped 10% from peak, and the fact that they're still down 5% from peak in Nashville, it should tell you that we're in a much more stable environment than we were when they were going vertical and when they were tanking. It's just very stable right now. It's very unpredictable. Okay, let's take a look at this. This is contract volume for Nashville. And one thing I want to show you here, let's start with mortgage rates. Mortgage rates have troughed and now they are going up. And this trough and trend up spurred a lot of demand last year. So I would expect a lot of demand. However, when we look at contract volume is not going vertical like it did last year. Now, I would be raising alarm bells and freaking out, except for Nashville just had one of the biggest winter storms on record. Okay, 8 inches of snow, and it's been wild out there, guys. I mean, it's been very icy, very dangerous. People aren't going out. There's no closings happening. And you can see that no closings are happening. Look, you can see it's strongly, this black line is closings. And then, we get a snowstorm, and what happened? Our close volume dropped. Why? Because nobody's closing. You can't close. You can't make it to the title company. Some of this could be noise. But if we go year over year negative on contract volume, that would be a very bearish sign, even as interest rates are creeping up, okay? Interest rates creeping up, I think, should be a solid signal for buyers to jump back in and snatch the quote-unquote lower rate than it was in October. The other thing I want to show you is this right here. I'm so proud of this, guys. I am so proud of this. I am building a map. I'm carving out neighborhoods, and then I'm color coding it based on the inventory in that neighborhood. Now, the reason this is so awesome, and I know that sounds like I'm bragging, and I am bragging a little bit because this is a great tool, but the reason it's so awesome is because every data tool out there does zip code or county, median price per county. Like, none of that actually helps you. You realize there's $500,000 houses in Franklin. There's also $5 million houses in Franklin. To get a median price doesn't actually help you. This tells you not only what neighborhood you're looking in, what the close volume is in that neighborhood, what the inventory is in that neighborhood. Look at 0. It's because there's 2 active listings, but 52 have closed in the past year. That's a very tight neighborhood. Look at the median price. It's $569. That's well below the median price in Franklin. So you can see the price trend is not strongly positive. That to me is very stable. Like, this is kind of an attractive, it's a very interesting neighborhood. But the bottom line is red is seller's market, guys. Green is buyer's market. So you come over here and you think, look at McKay's Mill. McKay's Mill, much tighter. There's only 1 active listing right now, and there's 21 in the closed volume in this section that I had. But if you go right across the street, okay, there's only 3 that have closed in the past year, and the active listings are 4. Now, I will tell you a couple things. One is that these are $5 million houses. So that is true. But I'm still working out some kinks, and some of the new builds aren't showing up in the data. So it might look a little higher than it is. But generally, I mean, I look like Preserve. I checked this one this morning. The Preserve, this neighborhood's like, I don't want to say a disaster, but like, here's a $2 million neighborhood. I already called this one out, but like, you look at it, 3 active listings and only 2 have closed in the last year. Only 2 have closed in the last year. We can look at it and see. By the way, I updated this chart to show you the median price per square foot, upper quartile, lower quartile. I know some of you guys just want to see a line chart. You don't want to see every transaction. That's kind of overwhelming. So this chart is just upper quartile, lower quartile. You can see the transaction volume is just so low in this neighborhood. There's like nothing happening in this neighborhood. It's really hard to calculate a median when only 2 houses transacted. But what I will tell you is it's not going to go well. In fact, there is a house listed in the neighborhood that's lower than its 2021 sales price. So the Preserve to me is it's a $2 million neighborhood. You're looking for a $2 million house. That's a neighborhood I'd be concerned about. Like, hey, what's going on in this neighborhood? Look at Brent Haven. I love Brent Haven. Okay. It's a buyer's market. It's got a median sales price of just around $1 million, but you have houses that have sold for $4 million. Okay. So you get a median home sale and you're getting a pretty good price relative to your neighbors who are paying 4 times more. Okay. You can get an acre lot. Look at this price trend. The price trend is negative. Okay. Now you may say, oh, but it's negative. Prices are going down. To me, it's a huge win, right? You're getting a great location. You're getting into a neighborhood or an area that this kind of, you can buy in that neighborhood or area for 4 times less than some of the houses are going for. That to me is very attractive. You see all the active listings. They're all overpriced relative to where the comps are, where the closings are. But the ones that aren't, the lower you get, you can see they go under contract. This one, interesting enough, let's look it up. I have not done this, but let's look it up. 2607. Let's see what we got. Oh, yeah. That is an ugly old house. I know zero about that house. I'm just telling you, to me, that's an area that's attractive when I look at neighborhoods, when I look at what some of these neighborhoods are going for. Some of these prices are insane. I mean, there's a lot of $5 million houses over here. Okay, last thing I wanted to show you, 2 things. This record breaking, we hit a record high in the stock market, guys. And you may say, oh, it's a bubble. Clearly it's a bubble. It's a bubble relative to a lot of measures. Price earnings expansion is happening. But there's another thing it could be. And I know I reference this a lot, but this is Turkey's stock market. If you've noticed, Turkey's stock market clearly looks like a bubble too. Do you know what the difference is between Turkey's stock market though? Is they're having a currency crisis. They're having massive inflation. And so this is what massive inflation looks like. Okay. And this is what their housing market looks like. So if you want to look at something that goes way up and then drops and then it's coming up and you're like, oh, but look, it's doing that whole, like the bubble thing. And I agree with you, it could crash. We've got a lot of crazy people that'll just print money in DC and they will make it more like this than it will be like a crash. Keep in mind, 2008 crashed because Congress wouldn't do anything. In 2008 crisis, there was a big fear about inflation. These MMT people, they have no clue what they're doing. They have economic nonsense in their heads, and they're playing games with our money that we don't even understand. I'm not saying they're not smart people. I think they're very smart people. They just don't understand what they're doing. And with that, I hope you guys have a great rest of the week, and I'll see you next Saturday.